on the day. Mia Kruger, Portfolio Manager at Kruger International, joining me at the desk. Thanks for your time, Mia. BHP Billiton, hard hit on the day, 4.6% in the red. We know miners across the board in Europe have been under pressure, in Australia have been under pressure, but also delivering their Q3 figures today. What did you take from this?
Well, just to get to the price, I mean, we saw commodities around the board being down today, so not something too concerning, slightly further down than the rest of them, but I think not so much in favour as we've known for substantial amounts of time. But from the production reports I took, there was two particular highlights for me. The first one was from the Escondida mine in Chile, where they had copper in concentrate production of around 61% up year to date, and they're still on track there to increase their yearly production by 20% from that mine. Another thing for me that I found a positive was the fact that they had their record production again at the Western Iron Ore mines in Australia, and they're still on track there to deliver around 200 million tonnes of iron ore for the year. And then just on the exploration side, you know, there were a couple of things. The first was the fact that they've already had a production of coal at the Queensland Coal Project ahead of schedule. They've estimated a cost of around $775,000 for the petroleum projects, mainly in the Gulf of Mexico. And then there's around 19 projects that they're busy with currently, and they're all low risk brownfield projects. That's a good thing for Billiton. And then they've sold off their diamond business on the 10th of April. The transaction was finalised, and that's to clear up their book. So overall, I don't think it's, I didn't find it worrisome. I just think to myself that if you look at a company like Billiton, which is a mining company, and they all are actually mean reverting companies price-wise, that the price will turn around sometime. And I know there's a lot of value investors there who just hold on to these positions, and particularly we do too, because over the longer term we still think that the price, which is now at a very long time low, is sometime going to turn around and support being supported by the earnings then.
What do you make of the fact that their petroleum division now accounts for a third of earnings? Did you like the shift that they've made into the oil and gas space?
Well, this has been coming along for some time now. They've stated over the last couple of years, or a little bit longer, that they want to shift their attention to petroleum. They see energy as a key area globally for them to grow, and I think that they've got a good foot in the door there, and it's a good part of their book, and I think it offers a good growth prospect for them.
Looking at the overall market today, I mentioned that a few stocks in the top 40 escaped unscathed. Mr. Price, just one of those stocks, and overall retail sales surprising on the upside today. Did you see that as a positive signal? Because some people pointing out that surely this positive momentum cannot be sustained given where consumer debt levels are and consumer confidence levels are.
I absolutely agree with that. The fact that South African households spend around 75% to the rand, or 75 cents to the rand, of their income on debt is not a very good signal. In the US, it's a completely different story. Their consumers spend around 10% of their income on debt servicing at the moment, which is at a very long time low for that country. So I think if you look at South Africa specifically and our retailers here and the price valuations where they're trading at the moment, I'm not too convinced that it's a buy, and we won't be buying, our company won't be buying into them, and I wouldn't advise any investor to buy into it. The chances of momentum of consumer spending going forward declining is much larger than the chances of those consumer spending increasing over the next couple of years. So I'd be wary, especially at the high valuations that you're paying for these companies.
What about Massmart? Because Massmart has come back nicely in Q2. It's up 4.5% this month. You think anything to read into that? Because almost heading to 200 Rand.
Well, again, I think price-wise, people probably picked it up. It was trading a little bit cheaper than the rest of them, but not cheap at all. So if you look at the historic valuations, most of these retailers are trading at twice their long-term average price-earnings ratio. And I don't really see that expectation of earnings growth that investors that are buying these companies at the moment have coming through.
Now, a lot of excitement if we're talking about international earnings that have come through. A lot of excitement about Coca-Cola and change of their model with the bottling company yesterday. The stock was up. There was a lot of talk about that. Obviously a multinational company. It's got developed world exposure, developing world exposure. Did you like the numbers? Anything to take from those earnings?
Yes, well, I think it was a decent set of numbers. I think Coca-Cola is a good company to invest in, and they've actually underperformed the market, the global market year to date. So, but it has picked up lately. So the last couple of last probably month or so, the price has rallied quite a bit. So not that it's expensive now, but I think that the numbers where they indicated that their net income was down around 15%, but that was mainly due to the restructuring costs and the reinvestment in the distribution in the US. They currently bottle around 80% of their beverages there, and they are planning to keep the production capacity but sell off the bottling and the distribution part of the business to actually unlock some value for shareholders. And furthermore, if we looked at the volumes of the company for the quarter, they had a strong growth coming from emerging markets of double-digit growth of 15% again, which is very, very good news for Coca-Cola. They just seem to keep on growing. They also extended their market share.
Do you have it in your portfolio? I mean,
we do keep it in our internationally managed portfolios, and yes, it's a company that still offers value relative to the market if you look at it in that way.